Most investors and economic analysts say the last-minute deal struck by U.S. lawmakers to avoid a government default helped prevent a possible recession. But they say it is only a temporary delay and does not fix the underlying problem of a growing fiscal deficit with a combination of taxes and spending cuts. This ongoing uncertainty hurts businesses like STUDLEY Incorporated, a commercial real estate firm that manages some well-known properties like the Time Warner Center in New York City. Heidi, the chief economist at STUDLEY, says their clients and the markets need consistent economic policies in place to invest in long-term projects.
I think that's really what the markets are craving, is that long-term stability and the certainty that comes with knowing that we have a budget at least through the current fiscal year that also allows us to know that the Treasury isn't going to be facing a debt ceiling, let's say, every 3 or 4 months.
John Glynn, managing director of the investment brokerage firm DREXEL Hamilton, says the unresolved budget battles could reduce consumer confidence, affecting the automotive industry and retailers.
I think that people are going to be a little bit reluctant because they've just gone through something. They think they might have to go through it again in 3 months, and they might be a little bit cautious with their spendings.
Harry Smith, a senior vice president at DREXEL Hamilton, says lack of confidence in government and slow economic growth could also mean fewer jobs in the near future.
The factors that we can't quantify, like employee attitudes or employer attitudes looking forward, do they really want to hire? Do they really want to add people to staff when we're not really sure where we stand, with the government, because we're going to be in this situation in 3.5 months.
While the budget deal averted some immediate economic problems, it is not enough to put the country on a path to long-term robust economic growth. Brian Patton, VOA News, New York.